Good timing.
Well, great. Sorry, very sorry about that cough. Howdy, everyone. Welcome to our webinar tonight.
The first webinar of 2026. So we're back. Looking forward to having an interactive conversation with you guys. We've seen hundreds of questions come in so far around sort of the broad theme of investing in 2026. So we're going to cover off a few things this evening and trying to make sure that we've got plenty of time to come back to questions that you have through the event or sitting on your mind already. So if there are things that you want us to cover off, drop them into a question note, say hi, let us know that you can hear us loud and clear. This will be recorded, so if you have to drop off at any stage, do feel free to just note that you can come back and you'll be able to see this through our YouTube channel.
Totally, but get your questions in the comment box here. We will answer your questions at the end. Keep them coming. For those of you who don't know who Kernel is, we are a platform. We offer a range of products that help you to build, manage, and enjoy lasting wealth. Those include a Smart Saver product, which is for savings. It also includes a Kiwi Saver product, a shares and ETFs product, and the focus of tonight, which is on our investment funds product. And that is, we're going to spend a bit of time later on talking about how to predominantly invest in index funds. But yeah, then we're going to also kick into a 2026 market outlook. Before we do, I just want to make very clear that the views today are all perspectives of the presenters. These statements are general in nature, and none of this should be considered as personalized financial advice. We're here to educate and share our outlook, but your specific situation may be unique to you. So please do seek advice if you want help or specific input into your situation.
Great seeing all the highs. Let us know where you're from as well. So it'd be great to see what part of New Zealand, or even if you're overseas, drop us a little note and we'll kick it off.
And for those of you who don't know us, my name's Armin. I am the head of product here at Kernel, and this is Dean, our CE. So welcome everyone. But let's kick it off. We're going to start with a small update on Kernel and what all of you customers have been helping us to enable and achieve over the past year. So let's hook into it.
Yeah, look, it's been a massive 12 months. And so look, we're really excited by the behaviors and results that we're seeing from the customers that we've got and those that are joining us coming on this journey. So just some high level numbers about how much Kiwis have invested with Kernel and what that's looked like. So there's over 50,000 customers who have joined Kernel, hi to Nelson, hometown, by the way. And that's resulted in total assets on the platform going past 3.5 or 3.3 billion, which is astounding, right? And that's 115% growth in the last 12 months. So what's really heartening, though, I think for us and what we've seen in the broader metrics is that so many of our customers, despite volatility in markets, despite uncertainties in the world, have found that joining the Kernel experience and platform has really driven the good behaviors that they're trying to achieve and get them on that long-term saving and investing goal. So we're going to dive into that tonight, but overall, look, it's been some pretty significant numbers and growth, which is fantastic to see. So many Kiwis out there are actively engaged and thinking about how they're building wealth, how they're managing the wealth, and trying to be proactive in their future. So it's
totally, yeah, and you can see the 115% growth year on year for Kernel, and so it's a big thank you to you guys for entrusting us with your money and helping us to do what we do, so that we can help you do what you want to do. So thank you.
So jumping straight into it, like what do we do? And I think that's a key message that we've talked about. Like Kernel is a platform, and we're here to invest significantly in the platform and what we can enable and help Kiwis around the building, understanding, and sort of enjoying their lasting wealth. But behind that sits a lot of products that we've built as well. So a range of index funds and Kiwi Saver offerings and savings accounts. One of the things that's quite interesting that we've noticed and we're very proud of to see, the first time we've had the Morningstar results for Kiwi Saver for 3 years. So we started Kernel's journey with a platform and some index funds. Then we expanded into Kiwi Saver and savings accounts and building a lot more platform functionality. But Kiwi Saver obviously makes up a large part of Kiwi's wealth. It's typically our second biggest asset outside of our own home. So we've been very proud to realize that for our first 3 years of Kiwi Saver results, we've actually had first, second, and first across the leading diversified fund classes that sit within the Morningstar reporting. So, great from our team's perspective to be able to celebrate that, but also what that means for our customers in terms of better outcomes, more choices over time. So
yeah, and totally a great testament to our underlying ethos and kind of how we see the world when it comes to investing. So moving right along to some of our, I guess, broader fund performance, which is covered here.
Yeah, so look, obviously the 3-year history, the core diversified funds typically are the go-to for most people, particularly within KiwiSaver. But we've got a whole suite of tools that ultimately are helping people personalize their own investing journey about helping them achieve their specific goals. So one thing we wanted to highlight here was we don't focus on short-term results. We do want to draw attention to the long-term outcomes and what are those controllables. But you can find this information on our website. And so here is just a quick snapshot of the broad range of Kernel funds over 1, 3, 5. As you can see, some are newer, don't have a full history, but you can find index returns. Others have been around for quite a while now, and very soon we'll be getting into, before we know it, the 10-year category of results. But one thing I wanted to highlight was, where do you find this information? I agree, maybe not the most obvious on our website, but Armin, do you want to talk about where people can go and find more information on any of the funds and what the choices are with Kernel?
Yeah, no one pain point on our website at the moment, which is that we need to make performance, and you can find that on the website a bit clearer. Transparency is absolutely tied to our underlying ethos and what we want to provide to our investors. And so if you hover over the investment tab within our main navigation on the marketing site, you'll see there that we have our funds as an option next to Kernel funds. And you can navigate to this and then find on that page a wee toggle, which will allow you to toggle between either our core range of funds or fund performance. And so each of our funds has its own dedicated page where you can find individual performance, fact sheets, all of the relevant information to help you make an investment decision. But also on that toggle is a fund performance tab, which will allow you to see all 27 of our funds and drill down through all of them and see our various performance
single view
of each other. A single view of performance,
nice
basically over 1, 3, 5 years. So
and if they don't have it, we've got to tab index performance just to try and give people a longer term context. We're very focused on the long term outcomes here. So if we've got a newer index fund that's been launched, obviously we want to try and give you a bigger picture rather than just, hey, there's no history. And so that's where the index performance comes in.
Totally.
But yeah, just an FYI where you can find information. I think we see, a lot of people that ask about further information, and we really want to try and give you as much transparency as possible. That's a big ethos for Kernel. So on any fund page, so when you are back on that fund page, you can select under the funds and go to, hey, I want to go and look at the high growth fund, or I want to go and look at the Australia 100 fund. On that fund page, what you will find is a lot of information, all the fund holdings, performance, fees, general description. At the bottom of the fund page is additional resources. And we've also got a tab for this at the footer of the webpage. But the fact sheet. So the fact sheet is something that is produced every month for all the funds. And that is a great, simple 2-page snapshot of all the core information that you need. So it gives you insights to sort of the volatility, the ups and downs, what sectors it's investing into, what countries it's investing into, what fees it's got, its risk rating. So do really encourage people. Again, we get a lot of questions about this. There's a lot of information in there. We'll continue to find better ways to make this visible and available to you really easily. But if you haven't found it already, this is where you go to.
Totally. Moving right along, we're going to talk a bit about the Kernel Save product, which we offer. Dean, do you want to?
Well, we had an OCR announcement this afternoon. And so obviously the decision today was to hold steady at 2.25%. We're going to talk a little bit about what that means coming up later tonight. But we want to draw attention to the Smart Saver account generally, because one of the things that we're actually incredibly proud of is we've actually boosted the online savings rate. So this is a direct bank account that you can basically deposit into, have your savings, emergency savings or short-term saving goals sitting into. We see a lot of people that want to use it as a place to park money while they start to invest in the market. But we've kind of gone counter to the market at last month, where we increased our rate from, I think, 1.8% up to 2.25%. So the on-call savings account is now matching the OCR. We had an OCR announcement today that held that rate at 2.25%. So the next time where there may be a change in that rate is at the OCR review at early April. Where that direction comes to, we'll talk to later this evening. But overall, what we've seen is a real significant growth in people going, hey, this is a great, simple online account.
Totally. And so why would you say with Kernel that people might want to hold their emergency savings with us? So we often hear out of sight, out of mind. It's not their day-to-day banking partner. They might want to bring their emergency savings over to us, or they might have a lump sum or dry powder that they're waiting to deploy into the market. So there's a bunch of great reasons that you can use the Kernel Save product, and equally it comes with a great and competitive rate now, as per the screen in front of you. Additional to that is Kernel Save's timeline for accessing your money. We've seen a few comments and heard from the support forums that people think that the time to receive this money back to the wallet is somewhat clunky, but it actually can be received within a day. So if you are placing a withdrawal into the savings product anytime between...
This will be assumed that you've already got some money in Kernel, you put it into the saving account, and now you want to try and access it. This timeline works both ways, but it's a good example of people who want to get some savings out.
Totally, yeah. And so if you're placing a pending withdrawal from any time between 9 a.m. and 2:30, you have an opportunity between 2:30 or 3 p.m., depending on when that money returns to your wallet, to then place a withdrawal back to your bank account. And so there is same-day liquidity for that savings product so that you can save with us, but you can also get it back to your bank. And if you need to make, be it your emergency savings and need to make some sort of emergency payment, you can get that money back within a day. So it's a great option for people who want liquidity, but also a great rate to support whatever those short-term needs might be.
Yeah, so we'll continue to look at ways that we can sort of expand those windows. We know that's quite tight at the moment if you want same day. If not, it'll be the next day type thing. But ultimately, there is a scenario now where you can line up those windows and achieve same day. We'll keep trying to expand those windows and give more choice and flexibility when it comes to your savings.
Great. One final point on the update side and what's happening at Kernel. So we do have live right now on our shares and ETFs product an FX rate offer. And so we have up to 50% off across all of our plans on our shares and ETFs product. I did just see a comment there for shares and ETFs being trackable via Zero Pocket Smith. Thanks, Hunter. We'll come back to that one later. But we also have a discount now on the FX rate, which is up to 50% off across our plans. So yeah, if you're looking to get discounted FX on our shares and ETFs product, now's the time to have a look. Very good. And I just want to speak to some of the upcoming product developments that we have. We have a bunch of beta testers using our platform right now to help us enhance the experience and inform feature development. So thank you to all of those beta testers. Your support is greatly appreciated. What you are helping us to enable is a mobile app, which is coming down the line. We have had non-stop requests for a mobile app at Kernel, and so we do have this in motion. It is looking like it'll be Q3, Q4 this year that you get access to that one. We are also working on expanding a bunch of digital tools within our platform. We're actually overhauling a bunch of core UX flows within the platform. So shout out to all those beta testers who are helping to support that, and that'll be layered into our tiers, and a bunch of different features will support that. We're also looking at additional markets in our shares and ETFs offering. And then additionally, we're looking at additional cash products to help you with your short-term savings objectives. So if you have questions on any of those things, please feel free to jump into the DMs and ask, and we'll perhaps get to those later. But thank you again to everyone. We are continuing to work hard and build a bunch of features that hopefully support you to manage your wealth.
Yeah, and thanks to the customers, right? And the feedback. It's through your journey with Kernel that we're able to invest in this and scale. We've grown significantly in the past few years. This year, we're investing heavily into what we can deliver for you guys. So we've got a growing team here, all in New Zealand, that are responding directly. And your feedback actually does generally shape the roadmap and prioritization. And so we've got more people joining us here in Auckland and across the country that are building out what is, I would argue, a very ambitious and aggressive roadmap for what we want to deliver for customers. But the more efficient we can do that, the better value we can provide. And so, yeah, new dashboard will be rolling out for the next couple of months or so. That's a great chance to get some early feedback as well, because anything that comes out of that will shape the app design, how we want to roll that out more broadly for our customers as well.
Totally. We'll talk a bit about that more shortly. Yep. Moving right along, we're going to do a deep dive tonight into the Kernel Funds product, predominantly in the index investing space. Yep. And so we'll jump right into that.
Yeah. So if you missed the last webinar, last time we sort of focused on the shares and ETFs feature. Happy to answer any questions on that, but otherwise tonight we'll talk a little bit about the fund range. So broadly speaking, Kernel has a growing range of index investment options and building tools that are basically preset baskets of assets that can enable you to get really diversified exposure with one single trade, with low fees, tax efficiency, etc. So an index fund is ultimately just a basket of assets. Most commonly, you'll think about that and hear it from the lens of some well-known indices like the S&P 500. The S&P 500 is an index that basically just measures the performance of the top 500 largest companies in the US. And there are a range of indices. So you get all sorts of different index strategies these days. So we've got the NZX 20 in New Zealand, the S&P 500 in the US, total world index funds. And Kernel's role is ultimately trying to, as a database business, deliver that to customers in a fund structure. So the fund is ultimately just buying all those stocks that make up the index, holding them in a fund that you can buy a unit in with one trade. So that's sort of the growth. Index funds overall have been growing massively over the last sort of 50 years, but particularly in the last couple of decades. Contextually now in the US, they make up about 40% of the market. New Zealand has been growing really rapidly onto this the last sort of 5 years. My background's in index funds, but I think Kernel has driven a lot of that engagement and awareness. And you're seeing a lot of personal finance commentary around the understanding of index funds.
Totally.
So encourage you to dive in and sort of research it. If you want and you have any interest in it, let us know, because we're keen to do sort of maybe an index funds 101 deep dive into the technicals, what this looks like, how do index funds work in practice. There's a whole other talking point. So if you've got any interest in that, drop us a note. We can always organize another webinar that goes a bit deeper into this topic.
Yeah, just quickly, it's great to see the comments going nuts there. Adam Boken, yes, absolutely. That's something we're working on. If you could get in touch with support, your situation sounds interesting, and we're always looking for beta testers. So
they may not see the comments on stage. So the question was...
Well, the question was, my wife and I are trying to sort out our various investments into pots, but we're disappointed to find we can only find and differentiate by actual fund name. Pots are a key missing feature. This is something we're actually working on right now, if I understand your question correctly. So please get in touch with support. I'll touch base with you directly, and we can show you what we're working on and see if it would support you and your needs. But yeah, anyone else who's wanting to beta test, please get in touch with support, and we can share all the upcoming stuff with you. Moving right along on the Prezzo. So with index funds and getting started with index funds, we have a range at Kernel of what we call diversified funds. And so if you're new to investing and new to index investing, then the diversified funds are a really great place for you to start. And so we now have a spectrum of index investment funds that are diversified. And so what I mean by spectrum is that we have at the shorter time frame, or typically lower risk, typically lower returns end of the spectrum, we have what we call a cash plus fund. And then the longer time frame, or typically higher risk end of the spectrum, we have what we call our high growth fund. And so these different funds are at the ends of the spectrum, polar ends of the spectrum for meeting your investment objectives. We obviously have two funds in between, one being the conservative fund and the balanced fund. And so these are all designed to help you achieve various outcomes depending on whatever your objective, the type of risk that you want to take on, or the time frame or time horizon, as we call it, that you'd like to be invested. And so if you're looking to get started with investment funds, and I guess
on your investing journey,
or your investing journey, and you're not, I guess, you're not keen to
build your own.
Yeah, you're not keen to build your own. We have a bunch of options which you can select based on various profiles or objectives, which we outline within the website. And when you're making a selection, which can help you identify what's the right fund for you to get you started, basically. So
it's not one or the other. I think that's the thing. And the question that you answered around pots, right? We're often thinking about our money with different objectives. So we may have a short-term pot of money that we're looking for a particular goal. It could be for a travel purpose in a couple of years. It could be the house deposit. It could be a new car. So that may sit within a more conservative end because you need certainty about that value of money, and you're trying to get half return on it, but with confidence you're going to get the pot of money back towards that objective. Then you may have the other assets like your retirement fund or your long-term savings or investing. You want to think, hey, I want to maximize that for the long term. That may sit towards a high growth. So think about these as building blocks. One of the great things with Kernel is that we don't restrict you. So you have no constraints about how you mix and match. And one of the benefits of the new dashboard is going to hero a bit more about the idea of creating these objectives and being able to bucket into each of them the respective investments that you have. So think about these as a great building block to get started with, or actually for anybody on a long-term journey. Try and tie them to your investment time frame, what the objective is for each of those buckets.
Totally. Yeah, that's great. I can see Adam Boken giving us a thumbs up. That sounds like we've absolutely
on the right track.
Yeah,
bring on the portfolios and goals. Yeah.
Very good. And so if you want to go beyond picking a diversified fund and then dig into the rest of our offering, we obviously have 27 funds. So there's a range of other options there. You could take on various strategies when you're picking
Yeah.
those funds. But something that we, I guess, advocate for a lot is what we call the 80-20 rule, or sometimes known as the core satellite approach to investing, where your core funds are within those core range of diversified. We also have some other options which we would consider core funds, which you would fill within your 80% bucket of your investment strategy. And then we have a range of funds which would perhaps fall inside a 20% allocation, which these are typically thematics or ones that are exposure to various industries, or in some cases, we also have a shares and ETFs product, and you might want to get exposure to a particular ETF or corner of the market. It might be a Bitcoin ETF, whatever it might be. But so the 80-20 rule is essentially saying that you should invest the core of your investment strategy in what is deemed to be good, diversified core investment funds.
Yeah, I think one of the great ways to think about this is when we think about core satellite investing, and I'll come back to a couple of questions I've just seen as well, you could think about this at a goal level, not just overall. So, okay, what are you trying to achieve for your long-term savings goal, maybe your retirement bucket, versus what are you trying to achieve for your house deposit in 3 years bucket as well. So it doesn't have to be at the whole level. The idea of the 80-20 or the core satellite type investing is that you're controlling the controllables, and ultimately that the core should get you to your goal. The satellites are the nice to have. They're the things that may increase your outcomes, but they may come with increased risk as well. So the core is the thing that's doing most of the hard work for you. It's the thing that's sort of known and controllable. And so, as Armin touched on, you could actually build a core out of the diversified funds. You may go, actually, I'm investing for my retirement outside of my KiwiSaver. I want to use a diversified fund of Kernel as my core. And then I'm going to have a couple of satellite funds or some stocks through our shares and ETFs, Bitcoin, whatever it may be. These are these things around the side that, hey, they may be more volatile, they may not pay off, but you're not risking your whole wealth around it. Or when you get a bit more advanced, you may want to have a bit more personal control. And so you could actually build your core yourself out of a combination of funds that, again, typically, though, diversified, low fee, and you're making a combination that suits for you. One of the questions I just saw was what makes up the diversified funds. Coming back to the fact sheets, if you go to each fund page, you will be able to see in the fact sheet what each underlying index exposure is, what market exposure, sector. So really encourage you to go look at those. That's where you'll find all of that information. But core satellite investing is a really great way to think about building wealth and managing risk and keeping it simple ultimately.
Totally, yeah. Core to our ethos, and we're saying like the 20%, you can obviously have a punt, but don't bet the house on it. So it's basically that's how we stack it up. So what's popular at Kernel? So we've given you a snapshot here of the current popular funds that people are investing in at Kernel. These are percentage of orders over the last 3 months. And so you can see up the top there, we have the Global 100, which is universally popular at Kernel. But then you can see second there is the High Growth Fund, which is our diversified fund, which sits on the higher risk end of the spectrum, but it is a really popular fund here at Kernel. But on the other side of the spectrum, which I talked about before, is the Cash Plus Fund. And so these are the top 3 most popular funds at Kernel over the last 3 months. And so you can see that customers really are aligning, which I would hope based on their objectives goals, to funds that meet those needs. And so the Cash Plus Fund, like Dean mentioned, might be for a savings deposit. It might be for your first home. It might be for something that you're approaching soon. But equally, the High Growth Fund, which is on the other end of the spectrum, is up there as well. And so we've really seen customers mix and match their portfolios based on those objectives that they're working towards long term.
That's great, because it's not just been the most popular is not based on what's been the best performer for the past 12 months. It very 100%. Much has been people are combining products based on their different goals. So it's exciting. We want to keep enabling that and doubling down on it, basically.
Totally. Also really cool to see the World ex-US Fund there, which we'll talk about shortly. It's one of our newer funds, has been really popular over the last 3 months, probably due to a lot of geopolitical stuff that's happening in the markets at the minute. But that one there is right up there and really popular. Moving forward. And so when it comes to index investing, and also, as I say, these interesting markets and geopolitical conflict and whatnot's going on in the world, it pays to stick to your investment strategy. And when it comes to your investment strategy, there is a few things that you can control. Performance is not one of them. And so if the markets are doing their things, jumping all over the show, you can't control that. What you can control is the fees and how much you're choosing to pay on a particular fund or asset that you're choosing to invest in. And so Kernel typically is a lot lower in terms of fees compared to the rest of the market. And so here we've laid up those diversified funds for you and how they compare to the rest of the market. And so you can see across the spectrum that Kernel is typically lower. We're a lot lower when it comes to the high growth end of the spectrum compared to the market. But yeah, generally Kernel is a low fee provider. I saw a comment there earlier saying, well done on all the results, and when does this result in lower fees? Kernel is a low fee provider, so I would just say that we've done a really good job to try and keep fees low for our customers.
And yeah, it's a big part of how we're going to continue to deliver value for our customers. So one, we're adding more features, investing into the platform, helping build automation, and preparing for where we think the world is going. But we will also reflect the fact that we're getting scale now, which is exciting to see. So yeah, pretty proud though to take out those top spots across the Kiwi7 Morningstar results while simultaneously delivering lower cost to investors. But it is, if we think long term, the controllables. And so the controllables are, how do you invest? How do you stick to investing? And what are those costs to achieve that outcome?
Yeah, 100%. I'll say it more blatantly. Higher fees don't necessarily mean better returns. So choose what you can control. Fees is one of them.
And that's a good reminder. It's ultimately like why KiwiSaver is such a success is that it highlights all of the things that ultimately drive good investment outcomes. And by that, I mean, actually, it's 90% of what drives our results is the habits and behaviors that we impart on that. Regular saving, keeping fees under control, not chopping and changing when the markets are changing. So one of the things that we look to try and enable through our platform is the functions that enable our customers to do that really well. Part of that's auto invest.
Totally. Yeah. So a feature and platform which allows you to contribute to your wallet, which is your funding mechanism within the Kernel platform. And then from there to deploy cash into your chosen range of funds. You can see there 31% of our customers are using the auto invest feature. And so this is just regularly contributing into the market or dollar cost averaging into your investments over time, which we're big advocates for. It's a great way to set and forget your investments. And take a passive approach to what you're doing. A lot of our customers will turn on auto invest and that they won't log in daily. Some do, some absolutely log in daily, but the vast majority of them, they will set and forget and they will check in periodically to make sure that their investment strategy is on track. But yeah, they're picking a passive strategy and approach to their managing their wealth with Kernel. Additionally, and some of this may trigger interest, this is actually a wee snapshot from our dashboard UX, but that's in progress. But one thing that we really advocate for is aligning your fund and investment strategy to the goals and things that you're working towards. And you've heard us talk about that today. We have diversified funds that do align to certain investment objectives, be it cash plus and emergency savings, or your smart saver and emergency savings. And so one thing that we're big on is making sure that that investment selection is aligned to your goals. We do have a goals feature in platform currently, but I would admit that it's somewhat superficial. And so a lot of the work that we've been doing recently is about building an experience that couples both funds and goals together. And so coming in the next couple of months will be an updated version to our dashboard, which enables you to do that. So you will be able to bucket or pot or group assets into a portfolio which aligns to a specific goal of yours, and then start to derive insights on how you're tracking towards those outcomes. And so you can see there a snapshot of what's coming. A big shout out and thank you to all of our beta testers who have helped us to get this far. We've learned a lot through testing, and we're really proud of what we have coming out in the next couple of months. But this is just to say that we really do believe in funds and goals, and it's absolutely central to our ethos, so much so that we are building our entire platform around enabling customers to do this, should they desire. We know that goals is not for everyone. Sometimes it's an investment strategy, and so the platform flexes in different ways to really enable you to basically curate your portfolio or your look and feel for how your investments need to function and operate. So yeah, really excited to share that with everyone very soon.
The question mark on an app, if you missed it earlier, yes, in the works, coming on the back of it.
Totally. App gets an equivalent version to this, but obviously for mobile. So yeah, cool.
We will keep it quick because obviously we want to get into the Q&A and the sort of markets overview. So yeah, keep firing the questions through. Quick reminder, we talked about this in December, but most recent range of funds that we launched, World XUS, Australia, Conservative, and we've seen these as great building blocks. So just a shout out if you're interested, dive into them. Yeah, happy to answer any questions that you got on the end of the night.
Very good. Moving right along.
Yeah, so one of the things, obviously, we are very responsive to customer feedback, and it's a big part of how we prioritize our roadmap, the features, the products we're building, the markets we're expanding into. And obviously, we have a lot of requests for a total world fund. So a couple of things, just wanted to flag was that, yep, hey, we know a lot of demand for a total world fund. Our global SG fund is actually basically designed to track a developed global equity index, and it's very, very correlated. But you could actually build a total world fund with Kernel today. So if you think about what looks like a total world fund, I think somebody asked about this with the World XUS as well. But ultimately, the developed markets, basically the world market, kind of looks like a split between about 60% US, 30% outside US, and about 10% emerging. So within Kernel, you can actually customize and build that and have full control over it today. But I guess the other option for investors, that's through our shares and ETFs function. You can buy a total world ETF on the US market, for example. So depending on where your balance is, that's another feature. But ultimately, yeah, we see where customer demand is, and we'll keep you posted as our product roadmap develops.
We're always keen to hear about people who want additional asset options at Kernel. So if these are things that you're interested in, please shout out.
Just
let
keep
us know.
through. It helps.
Be it Total World or anything else, we're all ears in terms of recommendations. So please keep it coming. It's appreciated. All right, we're going to move along to our next section, which is how to navigate the noise. As Dean mentioned earlier, the markets have been incredibly noisy lately. And so we want to, I guess, in light of giving you an index investment 101, help you to then navigate the noise, as we say. So
so maybe quickly coming back to this, these headlines, these are something that as an investor and as a KiwiSaver member, you are going to see every single year. You just change what they say, but every year there is some sort of dramatic event that may create an emotive response to our investing. And that's why we come back to saying, actually, 90% of your success and outcome is driven by your behavior and looking through this noise, and also not chasing the FOMO, those emotive responses. Broadly speaking, our investors overall are really big and long-term thinkers, creating those habits and behaviors. But we have noticed a rise of inquiries for gold and silver and copper and Bitcoin, particularly in the sort of few months leading up to end of January. And then obviously we've seen headlines where silver has had its worst day since the 1980s. Bitcoin is now effectively halved in the past 4 months. What does this say as a market? What does this mean for an investor? A lot of these things on this page in particular, these are what we'd call satellites. It's not us saying don't invest in them, but it's think about proportionality and what you're investing into. Putting your entire portfolio into a speculative asset is a high risk move, and probably not the best place to do that through Kernel. But if you want to have a core portfolio and you want some satellites around that, you can go and invest in gold, you can invest in silver, you can invest in Bitcoin through Kernel. But we want to keep people focused on the long-term objectives and trying to make sure that these are just satellite investments. So think about that. A good example, again, that what I'd expect to see this year is IPOs. So new IPOs have also been often a hot topic for retail investors going, how can I invest in this stock? We expect to see a few more things coming to market this year. Anthropic, we've obviously had a bit of an announcement around where SpaceX and X is going. Let's see how that plays out. But I want to draw attention again to don't get caught up in the FOMO and the hype and what a mate has told you they've done really well in. One of the IPOs from the last sort of 6 months is Figma. So again, that was something we saw a lot of media coverage on. Now, Figma IPO'd at a price of $33, and I think it shot up about 250% in the first day. So it was, up over $140 a share. Today, I think it's about $22, $23. So if you are an investor that tried to jump into the IPO and think that there was going to be this massive momentum, and you saw how successful day one was, what you've now found is that price has fallen 85% from its peak. Again, this is not to say that investing in a single stock is bad. It's just a reminder that avoid the things that trigger our emotions. Don't chase things that have done strongly in the last sort of short period of time or window. Think about what you're trying to achieve. That's where the value adds. That's where you can control the outcomes. So as we think about more IPOs coming to market this year, I just want to caution investors again that speculative assets, IPOs, they are great periods where others will do better from taking advantage of you than necessarily that being your window to make a lot of quick return. So just a big caution for coming up in 26.
Shout out to Figma, though. Great piece of tech. Moving on. So we have some specific points that we want to cover regarding market outlook. The first one is around the New Zealand election, KiwiSaver contribution rate, superannuation, and access age. Dean, I know you're super passionate about the space. So
I'm very passionate. You would have seen a few things from us on social media, on LinkedIn. The reason why this is so important is it is probably going to be one of the key talking points of this election. And all of these things come together. So contribution rates are now increasing. So from April, we're going up to 3.5%. You have the ability to opt out of that increase for a period of 12 months. But KiwiSaver contribution rates are going up. That's a good thing. Overall, we should be saving more for our own future. But there are bigger factors at play here that we need to be considering. At the moment, I think the KiwiSaver access age is probably one of the key talking points for investors. Today, that is linked to the superannuation. So superannuation is 65, and so too is KiwiSaver access age. Expect to see a lot of political policies coming out around tweaks to KiwiSaver, tweaks to superannuation. We have written a blog on it. If it's not live, I've written some comments on it. On our social media, I've been posting some policy ideas that I would love to see talked about at this election. Top of the mind, without going into too much detail, I'd love to see the government contribution redirected from funding middle-class tax credits effectively for KiwiSaver contributors to funding kids KiwiSaver. We need to get the next generation of Kiwis involved in saving and investing early. I also think that the superannuation age is likely to need to increase. But if we increase that to 67, we should actually lower the KiwiSaver access age to 60. So we've got a few policy ideas that we would love to see discussed, at least at this election. I think the big call out here, when you go into considering how you want to vote, and as you're weighing up, do think about not only yourself, but what this means for New Zealand over the long term. A little history lesson, 1980s, Robert Muldoon scrapped what was effectively, at the time, a 6-month-old compulsory contribution savings scheme that New Zealand had launched. If that had not been scrapped today, effectively like a quasi KiwiSaver, we would have a higher per capita wealth than countries like Singapore or Australia. It was a great political decision at the time, 6 months in, to not force Kiwis to be forced to save for retirement. But the consequences of that 40, 50 years later are massive for our country. So please, this year, when we're hearing the politicians talk about KiwiSaver superannuation, do think about your own interests, but think about what do these policies mean in 50 years from time for our children and grandchildren. Totally. Have a look at our website, have a look at our blogs, have a look at our social media. It's going to be a big talking point. We'll keep sharing more. Love to get your feedback as well on what works or doesn't work for you guys.
Yeah, and the bottom line is contribution rate increases. They're not a retirement strategy, right? And so you need to look at your own individual situation and make sure that you're doing your planning towards retirement, putting a supplementary income on top of that with investment products, whatever it might be, to get you towards those outcomes later on in life. Moving along to alternative assets, which we've had a lot of interest in lately across shares and ETFs, people asking for various precious metals ETFs. Precious metals have done all sorts of things. Cryptocurrency has also done all sorts of interesting things lately, and commodities as well. Perhaps, Dean, do you want to give us an overview on what is happening in the alternative asset space?
Yeah, the long story short with all of this is ultimately outside of KiwiSaver, all of these things are available to invest in via the shares and ETFs function. If not, hey, we can look to make them available, but you can get gold, you can get Bitcoin through Kernel on our single platform via the US shares and ETFs function. Now, actually, what's interesting is for a lot of people, that may actually be the better tax structure. For some of these assets where they don't have income, you actually do want to be thinking about taxation generally and how you can optimize. IRD has made a ruling on cryptocurrencies, and ultimately that now is subject to capital gains tax. That becomes interesting. Maybe you do want to consider that in a PI fund. Same goes for precious metals. But what we're seeing generally is a bit of a pullback. The reason for the pullback is there's been a little bit of easing around where maybe the US is going with their central bank appointments, and that sort of ease back. I would say generally, though, these are very specialist areas, and things like gold is quite a different asset than many other assets. It's not the same as a Bitcoin exposure, which is, again, quite opaque, relying on our collective input in terms of its valuation. Gold has been bought up from a treasury asset and So it's hard to see at times exactly what's going on between countries like China trying to move towards gold deposits versus maybe owning treasuries. I think the long story short of all of this, these can play a role in a portfolio. They often are asset classes, generally speaking, commodities, crypto, precious metals, that can go through long periods of subdued performance and then large swings, positive and negative. And so think about these more as satellites. I don't think these are necessarily the things that we would promote as being a core building block for a portfolio.
Totally. Good shout. And then moving on to topic 3, which is the NZX versus the NYSE. Obviously, NZX has started to perform over the last wee while. And so you can see there on the right-hand side, a correlation between the S&P 500 and the index, which underpins our small and mid-cap opportunities fund. Tell us what's going on, Dean.
Yeah, I think we get a lot of questions around, particularly, say, KiwiSaver investors, right? KiwiSaver investors who will look at, say, a diversified fund and go, oh, there's quite a lot in New Zealand or there's quite a lot in Australia compared to, say, a total world fund. One, that's a common approach. And the reason being is there are tax advantages to investing locally than offshore. That typically means that offshore needs to do about a 1.5% plus better return per year to get the same net result. So there are some benefits to investing locally. And we also tend to forget that NZX actually was one of the best or the best performing developed equity market for the 10 years up till about sort of just before COVID. It's been pretty flat since. And I think a lot of people have gone, oh, there aren't the big exciting tech companies listed on NZX, right? So there are a lot more interesting high growth companies invest overseas, which is why you want to be diversified. But just like picking stocks, just like picking sectors, picking which country is going to perform well is a highly speculative approach to investing. What you need to factor into is what you can control. Let's be diversified. Let's control fees. Let's control tax. And that's what goes into building those diversified funds. And this is a good example. What people would not appreciate, for example, is that over sort of the past year or so, that the small and mid-cap index of New Zealand stock market has actually done better than the S&P 500
Incredible.
In New Zealand dollar terms, right? So while we've heard and talked a lot about high growth and AI, etc., there have been a lot of fairly under the radar companies listed in New Zealand in the smaller part of the market that have done phenomenally well. This is not to promote and say, great, go and invest into small companies on New Zealand. It's just to visualize and remind people that these all play a role in a part of a portfolio. And in today's world, I think it's easy to get distracted by big names, well-known names, or the big shiny things like AI, and forget actually that there's a whole universe out there of thousands of other assets that we should be investing into and considering. It's why we have things like infrastructure in our portfolio and property in New Zealand. They all have a role together in helping smooth and deliver a better risk-adjusted return over time. So keep an eye on it. Don't just think it's all about AI. There's a really good chance to think about actually what goes in together. And sometimes boring investing is actually a really good result.
Yeah, awesome. That's great intel. Thanks, Dean. Moving on to topic 4 and our final topic on the market outlook, which is
a big announcement today. Yeah.
Kiwis hold very dear to their heart, as well as the savings announcement, the property market and also the OCR, which we had an update on today, but also housing price growth and what does this mean for savers generally?
Yeah, so the OCR was reviewed again today. It was the first time under the new governor. And so she's opted to hold the OCR at 2.25%. Now, what does that mean? Well, the signals that we're sort of starting to see here is that, broadly speaking, there is a sense that New Zealand economy is starting to recover. There's some positive momentum out there. When you look around the market, you look at the various economists who ultimately are very bad at crystal ball gazing the future. So don't rely too heavily on what predictions are about tomorrow. That applies to interest rates, housing prices, share markets, is that, things are starting to look positive. There's a little bit of inflation still. Housing market is sort of bobbing around a bit. I'd expect to see, generally speaking, that there's still going to be a bit of uncertainty for this next 12 months in New Zealand, but it is feeling like we're on a positive trajectory. That is signaling that interest rates may start to rise, and contextually low, that rise is not looking to be the same at this stage as what we saw over the past couple of years, where we had a really rapid rise from sort of near zero to sort of 5% type thing. We're sort of hearing the signals are working towards going from 2.25 to 3% over the next couple of years. So for a Kiwi here today, what does that mean? If you're a homeowner, you're not expecting to see a major shock into your mortgage change over time. Mortgage rates are set partly by the OCR, but also by what they're seeing in wholesale rates and offshore rates. So it's not a 100% perfect tie. But don't expect to see the same sticker shock that you had a couple of years ago when effectively you went from a mortgage that was a couple of percent to paying 5% on your mortgage rate. So that's a positive if you've got a mortgage. For investors, this sort of lower, slow rise, that's still fairly positive for share markets and fixed income markets. It's sort of growth, expansionary, sort of stimulatory environment still. And ultimately, these little rises are designed to sort of keep a lid on the potential inflation, which is very hard to influence, actually. This is a bit of a sledgehammer approach. So let's watch and see. For savers, though, what we've seen generally, those who have got short-term savings or maybe more at the conservative end of the spectrum, the big change has been in the past couple of years where your term deposit rates have fallen, your on-call saving rates have fallen. And so again, you're going to be in this environment where you're not going to get that much bang for buck, particularly after inflation, through your on-call savings account or your term deposit. So it does mean you need to think more broadly about how do you invest and what are the other places to invest into. So overall, think fairly positive message. Keep investing doesn't fundamentally drive a change in your approach to aligning your investments with your goal. My quick final note on property, though, I think what we are seeing is that property market is really struggling to fire, which is actually, in my view, a real positive for New Zealand. You know, one, you want property to be increasing incrementally because it gives us confidence to go out and spend. But when we have runaway house prices, that's bad for those trying to get in. But it also means that we end up putting more money into property rather than productive assets. So big picture for us and for my view is that the things that have made property so successful for the last 50 years do not exist today. And maybe this is actually a good topic to pick up with a live debate in another event, and we can have a property versus shares debate. But yeah, overall, I think we're in a positive trajectory for where New Zealand is going. Keep aligning your investments with your ultimate goals, basically.
Well said. We'll hold you to that debate, Dan. So we're going to move right along to some Q&A. So please get the questions coming in. We're going to start with a couple key questions that came through. We actually received an enormous response from all of our customers and those of you who have heard about the webinar. So we had over 900 people send questions through. We had a couple of questions that popped up more than once. And so we have decided to answer those to kick things off. So the question one is around US concentration. With the Global 100 and S&P 500 so heavily weighted towards US tech and the Mag 7, how should we protect our portfolios in the AI bubble if the AI bubble bursts or if Trump trades policy tariffs create major US market downturns?
Yeah, look, there is a lot in that question, and something that we could really be talking about in depth for quite a while. If you come back, I sort of talked about this idea that if you look at a total world index today, US sort of makes up 60-70%. On its face value, that sounds high. I don't think you need to worry about a country concentration per se. These are typically, a lot of that weight in the Magnificent Seven are global companies, right? And the Global 100 itself, these are companies that are making revenues from and have assets in multiple geographic regions. That's one sort of peace of mind here. I think the AI story has a lot to play out. I feel less concerned about some of the large players and their ability to lead in the space in terms of their ownership of infrastructure, chip manufacturing, of models. What do the revenue models look like over time? Who knows? What does the capital expenditure look like? That's a question. I think I'd have more concern about other parts of the market that are not represented in listed markets, and that's the number of startups who have popped up and are now billion-dollar companies overnight because they've wrapped up an AI model, right? I think this highlights that there are always going to be periods of exuberance and not within share markets, and you're investing for the long term. If you are able to contribute and look through that, holding the course is still the thing that proves statistically to deliver a better outcome. But what you can manage is that risk, and that's partly why the World X US Fund became quite popular. It wasn't that people are using it to invest outside of the US and not hold US shares. They just wanted to manage that risk, and they said, I don't want to have more than 5% exposure to a single stock. Or I don't want to have more than 50% exposure to a single country. And so if you take a high growth fund now, the high growth fund's about 45% US. Somebody's asked the question, is 20% too high? Well, you can actually have that as a core and complement it with another fund to personalize to your view. So again, if you're worried about a concentration, if you're thinking that there is a certain view that you want to impart, you can do that with Kernel. Just be careful to realize that these events can take longer than you'd expect and then also happen quicker than you'd expect. So trying to time shocks, market movements, when a market may turn, if AI is a bubble or not a bubble, they're incredibly complicated problems. I would draw your attention back to controlling what you can control and aligning your investments with your risk profile.
Nice. And so question 2 is around currency hedging. We had a few people pop up and ask about currency hedging in the comments there. Should we be leaning toward hedged or unhedged versions of international funds right now to protect our returns?
This is, again, another game. So foreign exchange is one of those games where you have a lot of people out in the world who are FX traders. When I come around to seeing what we see in the market, including at all the institutions, bluntly speaking, we just see a lot of 50-50. So if you went and saw a broker or investment consultant or an actuary, more often than not, I would have high odds that you're going to go in there and their proposal for whether to hedge or not hedge the global asset exposure or global equity exposure, typically most of them have it as 50-50, 50% hedged, 50% not. We are partially hedged, again, similar within our global equity funds. Over the long term, these things will move around and will flush out. People are looking at it now going, okay, we're back to sort of 60 cents against the US. Should we start to hedge? I think there's still a lot of potential for both movements both ways. Don't get don't get too hung up on it. I think it's one of those things you can overanalyze. If you want a place to start, go for a diversified fund, 50-50 it, change your views over time, or when there's extreme moments. I don't think there is an ability right now to try and predict and add a lot of value through predicting your hedging approach. But the reason I say this, again, what's interesting is that people think that if you, just for context, what does hedging mean? Your investment returns are made up of the performance of the underlying investments that you bought, like your shares in the US, but they also can be influenced by the change in currency. So if you bought the S&P 500, that's US companies, that performance impacts your return, but so too does change in the US exchange rate. What's interesting is that people would think, oh, having that extra element would mean more volatility, bigger ups and downs. Typically what you see historically is though that unhedged are less volatile, because what happens is everybody floods back to the US dollar when there is economic shocks. But that's history. Does that play out going forward? Probably a bit technical, but don't suffer from paralysis on this.
Nice one. And question 3, decumulation. For those of us retiring in the next 1 to 5 years, what is the best strategy for drawing income?
This is another big topic. And again, this is a whole other podcast, I think, as well. 2 things to think about. When you retire is very distinct from when you need the money. And that also influences what type of diversified risk profile you would be in. I think when it comes to KiwiSaver, that often we see too many people moving towards a cash fund or a conservative fund when they're going, oh, I'm getting closer to 65, I'm going to access my money. But they're forgetting actually that, hold up, I'm going to live potentially for 30 years in retirement. I've got to fund that. So if you moved all of your money to cash just before 65, the odds are that as you start drawing down on that, you are going to run out of money in 20 years from now. So think about it like your buckets. There's a part of your retirement savings that, yeah, you're retiring in 5 years, but you want it to keep working to fund your needs in 20 years. So try and think about how much you need to bucket in terms of what are you planning to spend from your KiwiSaver or savings in the next 1 to 3 years? What's the medium term? And how much do you actually still need to be parked away to try and drive you some income or savings needs for 10, 20 years down the line? So it's not just about I'm retiring in 1 year, how I should change my profile. Think about how you're going to bucket it, what income she needs. We did write some great blogs, though, on how to think about passive income. And one of the beautiful things about New Zealand is that with the PI regime that makes up a lot of our funds here, is there's no capital gains considerations. There's no other tax considerations that you need to worry about. So you can just draw down a set income from a fund without having to worry about capital gains tax or other complexity that you would in other markets. So yeah.
Totally, yeah. And especially as you head towards those later years in retirement and you're hopefully on all conditions being positive, a great sum of money. So those are some of your biggest years to make returns, right? So
should we do some quick fire through some of these questions?
Let's do it. Get the Q&A questions coming in. We will also respond to some of the earlier comments that have come through. So,
so does the app come out this year? Yep. Rehedging may be that game shop, done money, less likely to happen at times.
All things going well, the app's coming out this year. Yeah, but I would say it's on track. So.
Factor funds, look, you can get factor ETFs through Kernel shares and ETFs. We were always open to considering other funds within the Kernel range specifically. So if you've got requests, do keep sending them through, like the Total World Fund. What have we got here? Yes, you can fine-tune the US, ex-US to heart content with global ex-US and S&P 500. Exactly, great way to have your own view around particular risks that you're worried about.
An equal weighted S&P 500 there. I do believe we have that on the shares and ETFs offering. So if you're wanting to get access to that, you could look at the shares and ETFs product.
Cool. Great to hear, Adam, there. Listening to you, realize that the goals were your first implementation of POTS. Just got to my account and sorted my funds into goals. Fantastic. Keep sending through feedback and reach out to Armin. We get you into the beta so you can play around with the new version as well. Wish we could invest KiwiSaver from gross pay like Australia and US. They make it look like it does as a calculator of gross pay. That's a total remuneration question that's going on in the market. Whether we see any political policy on that this year, that's effectively where is your KiwiSaver coming out on top of your salary or pay versus a part of it. Typically, that where you see that being taken advantage on, if you were on a minimum wage, but your KiwiSaver was part of your total package, and as KiwiSaver contributions are going up, you may actually end up having less take-home pay than the minimum wage. And something to be really conscious of as you're negotiating at the moment, particularly as KiwiSaver contribution rates rise now and into the future.
So your comment there, wanted an NZX or ASX. I'm presuming that means our direct offering or shares and ETFs. We are exploring local markets. So if you are interested in local markets, NZX or ASX, let us know. Drop a comment in the comments. Keen to understand if that's something you're looking for.
Why the different fee on the emerging markets fund? Great question. It is holding an underlying ETF, which means there's an underlying ETF fee that we have to manage there. Plus, we actually do have a higher cost base for the input costs on that fund. Emerging markets are actually slightly more difficult, particularly to access from New Zealand, which is also partly why we've had to partner on an ETF product. Cool. Any other key questions coming through?
I did see another one there. Any options for a crypto fund index? Not currently in our suite of Pi funds, but you can look at our shares and ETFs product as well. We do have a few Bitcoin funds and other crypto funds, which you can use to get exposure to crypto or Bitcoin or various other digital assets.
Carol's got a great question. Are you confident in sufficient protection against cyber hacks? Look, that is a big talking point that we're always talking about as a leadership team, from our CTO and across the spectrum, including who we partner with. Couple of things, a good reminder here. Kernel does not hold any assets. So one lens is the fact that we've got a great blog on our website as well that talks about this. All of the funds that sit within, like the Kernel KiwiSaver, or if you want to invest in the Kernel Global 100, they are ring-fenced separate funds that have independent custodians, all at arm's length from Kernel. So we actually have no influence, control, or access to that. It's not related party custodians either. These are independent custodians. And then overall, then it's our protections around the data that we own, and where we're protecting that through our security practices and also how we store our data. And that is something, again, that I think we're setting up really strong best of class for, in terms of customer data, what is possible, where we store that, how we store it is a big focus for us as a tech business.
Number one priority for Kernel. Yeah, absolutely. That's something we talk about.
Will the shares and ETFs function be available to company and trusts? Love to. This is not a Kernel constraint. This is a constraint of the existing brokers and some of the US regulations around being able to pass through the information needed for AML purposes on trusts and companies it's a bit more complicated. And as you can imagine with trusts and companies, there's a broader spectrum. So they can become quite complicated and hard to look through. So it's not that scalable. So a lot of the US brokers we deal with are quite hard to be able to enable that account type, but something that we will keep trying on. We will keep looking at, including when we start looking at other markets such as New Zealand and Aussie as well.
Okay, go on. S-Person05, I see, why are some ETFs and shares available via Kernel and others are not? Great question. As simple as it sounds to just turn on the market, it's actually not. To go and turn on everything requires us to source logos, information, data, a bunch of things to make a really rich experience. And so we've started by enabling all shares which have about a greater than $1 billion market cap in the US. And then for the ETFs, we have turned on a bunch of reputable providers, though we understand that there is a bunch more demand there for other providers in the market. So if there are specific things you're looking for, please just send a message to support or comment right here so that we can get a snapshot on that. We are turning on more providers as time goes on. It does just require a bit of effort outside to get those turned on. It's a work in progress. So yeah, keep the requests coming.
Trackable, syncing, shares and ETF setup.
Yeah, look, that's definitely something that gets requested. It's a bit more on the fringe case request. One thing that we are working towards, which might support you and what you're trying to do, is the ability to export, say, a unit price history or something that you could then load into PocketSmith or Xero if that's what you're looking for. I think it's generally unit price that people are looking to integrate with those providers. But if there is more specific scenarios that we can do to help you, let us know or contact support. There's a chance that we can perhaps provide you what you need so that you can import it in a CSV or an additional format. So get in touch.
Charlotte, why do I say that increasing KiwiSaver contributions isn't a retirement strategy? Exactly. It's a real positive step, but I don't think it's addressing the bigger problems and opportunity that we have, particularly with an election this year, about what helps uplift all Kiwis across the spectrum in achieving better retirement outcomes. Because at the moment, KiwiSaver contribution increases are great for the 2 million people who are actually contributing, but there are a whole bunch of people who are not enabled or incentivized to take care of their own financial future and start saving and investing. And so what I'd love to see, and what some of the blogs and social posts that we put out more recently are around, is actually trying to have a broader voice here about what are the levers that are actually good for a broader range of investors for helping us all achieve better financial futures. And that's what we should be talking about this election, rather than just relying and thinking that increasing contributions is the silver bullet, which it's not.
Totally. Would I be fair to say that for many Kiwis, that 3 to 4% is not enough in terms of retirement outcomes? We've got, 10% in Australia, going 12% in terms of contributions. So
what is the difference? Quickfire, I realize we're running over time here, so great chance to pick up another webinar. What is the difference between ETFs and index funds? A 2-second answer to that, which is longer than 2 seconds. An ETF simply means the units are tradable on a stock market. It doesn't mean that the fund itself is actually an index tracking strategy. An ETF could be actively managed, it could be index tracking. A lot of people just conflate those two because most ETFs are index tracking. But that is a great topic to talk about. Tax differences in New Zealand between ETFs and index funds, trading cost differences, and maybe we pick that up in a 101 on index investing. But we do have a blog on it on our website. So if you go to Kernel, look at our blog, you can find difference between ETFs and index funds, so that can do some pre-reading for you.
Option to add children's KiwiSaver accounts in the future. It's on the radar.
On the radar.
Later in the year, look out for this one. Yeah, it's something that we're talking about a wee bit.
We've got massive demand for kids accounts at the moment, people building family portfolios. So that's a great call out. What we're planning with account structuring app, we know that people want to have sort of household multi-account functions. We're doing some work behind the scenes at the moment that will set us up for later in the year to, one, take our kids accounts that are available today to a more seamless experience, but will also mean that we can start looking at rolling out kids KiwiSaver as another product line within that as well. So again, big list of exciting things that are coming on. Appreciate that. We'll have to wrap up there. Lots of questions still come through. Just keep shouting out. If you have any questions, feedback, requests, drop them into our support team, into our messages. Find us on LinkedIn, drop us an email. We're always here. We'd love to interact with you guys. We've got a lot of things planned that we want to roll out in 2026. And thank you. Yes, apologies for my voice tonight. I am suffering from a little bit of a head cold and blocked nose, but hopefully it just makes me sound more wise, and that all of this was great, insightful information.
Oh,
So
the man's got range. He can talk all day. So yeah, good shout, Doug. Very good. Thank you very much, everyone. We'll wrap it up there. Please, if you have any additional questions, shoot them into support and they can redirect them to Dean and I. We can hopefully come back to you.
Yeah.
We're more than happy to answer questions. The support team is there to support you as you need. Big shout out to all of our customers who have joined and all of the newbies who are here for the first time. Thank you so much, and we look forward to seeing you next time.
thanks, guys. Chat soon.
Bye.